I'm Stephanie Link. I'm Chief Investment Officer and Co-Portfolio Manager of Action Alerts Plus. Here with me is real money contributor, an expert on the commodity world, Dan Dicker. How are you, Dan?
I'm well, thanks, Stephanie.
So, I want to talk to you about some of these energy companies that are starting to try and find shareholder value creation. Maybe they're frustrated that their stock prices haven't moved.
I think that is the word.
Not,
go with that word, frustrated. They are frustrated.
So you have Occidental, you
Exactly.
have Noble.
Noble Corp, let's be clear, Noble Corp, NE.
There's two Nobles.
There's two Nobles, we got to be careful.
This is the NE, and then you have National Oil Well, Varco, NOV.
Right.
You have a lot of companies doing a lot of things. These three, though, I wanted to highlight and touch on because I think that they are really doing something in the near term to drive shareholder value after lagging the sector so substantially.
Right, and you have to tell me whether you think that this really does something special for the companies. I understand the point of it, and there's a frustration there. I definitely get that, for example, with NOV, with Oil Well Varco, which is a fantastic company, but has been dead money basically for a year, and trying to unlock, for example, move away from a very big portion of their distribution chain, which generated, I think, close to $5 billion last year.
19% of total revenues.
I mean, it's not a small piece of the pie
No,
here.
but with NOV, what they're doing is they're actually they're spinning out a low margin business, 6% operating margins versus double digits for the overall company average. So this is going to be immediately accretive. And this is on top of the company doing a lot of M&A activity since 2012, $3 billion worth of deals to find growth. And yet the market and investors have shied away from the company. I think a lot of that is pricing related in the deep water market, right? We've talked about ENSCO and having the struggles with pricing and that kind of thing.
We do talk about this, and this is where I can deliver a little bit of insight. I think that if you are trying to, as Noble is trying to do, split off what is the shallow water stuff and concentrate as best you can on the deep water. They're building 9 new drilling rigs that are going to be deep water, so they want to kind of separate what is going to be what they think is going to be and what I think is going to be the real moneymaker opportunity
deep
over
water
the course.
Versus shallow water.
No question about it. That's where it's all about, and that's what they're trying to do. And so this is kind of a frustration move. But if we're going to talk about concentrating on deep water, again, I got to circle back to all of those E&Ps which are so focused into deep water that also have been performing, because those are the ones that when it hits, when deep water really hits, and I think it will in the second and third quarter of 2014, those will show instantaneous gains in their stock prices. Obviously, we're going to go back to the same ones. Anadarko, we're going to go back to. Chevron is in deep water. And the one that I particularly like that's in the Gulf of Mexico, although they're hated, is BP. And they are by far the greatest underperformer of all, mostly because of Deepwater Horizon. But again, as this starts to clear, as that cloud over their head of Deepwater Horizon starts to clear, it will going into 14. Their assets in the Gulf of Mexico, I think, will shine through.
So there's a lot of places to make money in energy.
Indeed.
Starting maybe in the fourth quarter of this year. Okay, thanks so much, Dan.